You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
When Morgan writes, here, have a seat, Morgan.
Do you share a chair?
Nah. Do you got a mic?
Yeah.
Okay. So if you can hear us in the back, let us know. Go grab a coffee. We're still going to finish on time at lunch at noon and head over to the tavern and chit-chat here if you want. But feel free to grab a drink, come back. And now we're going to get into some strategy stuff about how we think about the world, the market. Where were you born, Morgan?
I was born in the Bronx. I didn't live there for very long. I grew up in Northern California, went to school in LA. Yeah.
So Morgan now works at the Collaborative Fund. What is the Collaborative Fund?
The Collaborative Fund is an early stage venture capital fund. Yeah.
And so how did you get recruited there?
Yeah, that's a good question. I have known Craig Shapiro, who is the managing partner, for several years. And he was the kind of guy, I met him years ago, and it was instantly, we just saw the world through a similar lens. The topics that got him excited got me excited. And it was clear that he was a guy that I wanted to work for, just because it's so important. This sounds cliche, but I think as the more time goes on, it's become more apparent to me that the people that you work with is going to make the biggest difference in your career. It's not even the industry that you're in or the company that you work for, it's the team that you surround yourself with. So I think meeting the team, it's a small team, it's only 6 other people than me, but it was clear that we saw the world through a similar lens, and we were gonna click, and it was gonna be something fun.
What was the piece that you wrote that resonated, where you got feedback from people who said, oh, you know, I think I can develop a voice? Is there a process, or was there, you knew at the minute you put it on paper, or tell me something that went wild beyond your dreams, and what it was that made it work, do you think?
Yeah. Something that I think has really been a big driver in content is that there's so much more content today than there's ever been. And because of that, people's attention spans have declined precipitously because there's too much to read. You don't have, 30 years ago, you could sit down with the New York Times and read a 4,000-word story because all you had to read that day was the New York Times. You didn't have anything else on your plate. So if you had 30 minutes to read, great, here's this long story that I can read. And it's not like that anymore. You can wake up in the morning and have 1,000 articles from reputable writers that you want to read. And because of that, people are only going to devote 30 seconds, 40 seconds to each article. And because of that, I think the type of content that is done well over the past, let's say, 3 or 4 years, are content that rather than a full article that starts with your intro and then your body and your conclusion, and it's 1,000 words, it's going to take you 10 minutes to read, rather than that, an article that's kind of broken up into snippets that you can just kind of read. You could start in the middle of the article if you wanted. So just kind of bullet points of what I think is going on in the world right now. Those have always done well, and I think they do well because of how the reader has changed over the last 5 years.
So you wake up, your jaw, give me a typical day at this new Collaborative Fund. It's been a month or 2 months?
5 weeks, yeah.
Okay, so 5 weeks. What is a typical day for Morgan?
Well, my typical day now is not different than my typical day was 5 years ago, which is great. And I think every writer spends the majority of their time reading. I think Josh and Michael Batnick would agree with that. Michael Batnick reads more than almost anyone I know. That's where you get your ideas to write stuff. So a large part of my day is just spent kind of casually reading. But that's where the ideas come from.
And the tools that you use, what are the key tools that you use for aggregating and disseminating? Yeah,
I think it's so important to have some sort of trusted curator when you're reading, because there's so much content out there. If you just try to jump in the deep end and try to find, just wake up and go to Twitter and just try to find what's good, you're going to get lost. There's too much out there. So I think having some sort of trusted curation is one of the most important parts of financial content these days. One person who I really like does a phenomenal job, and I think he's speaking later, is Tadas of the website Abnormal Returns.
So Tadas at Abnormal Returns, and most people know him here, he every morning figures out what people should be reading. So that's your starting point?
Yeah, so it's a link curation of maybe 15 or 20 articles that he has read, and I trust that if he links to it, it's going to be worth my time to read. Other people do that. Josh Brown does it every morning. Barry Ritholtz does it every morning. So people who you trust, who are reading more than you are, and are going to find their best articles and link to them, that is, I think, the best way and the only way that you could go about navigating the sea of content these days.
And so when you wrote with Wall Street Journal and The Motley Fool, what's an article or what's a concept that you continually come back to? What's the biggest mistake, and how should people think about their money?
One that's always surprised me, and it's done okay in articles, is this idea that if you ask somebody, how much do you pay for your cell phone? They can tell you maybe down to the cent. They can say, I pay $95.10. I see it on my credit card bill every month. If you ask someone, what does a gallon of gas cost? They can tell you down to the penny, $2.35, whatever it is. It's more in California. But then if you ask someone, how much do you pay for your 401k? They have no idea. Or maybe if they're astute, they'll tell you, oh, I paid 90 basis points. And you say, no, how much do you pay in dollars per month for your 401k? Oh, I have no idea. Because the fees for financial products are usually out of sight, out of mind. They're deducted automatically from your account, and it's not that they're hidden. You could dig deep into the bowels of your financial statements and find them. But people don't. And since they're out of sight, out of mind, people don't really think about them that much. They don't think about them in terms that they do other fees. And it's almost like the same idea that in casinos, they give you chips instead of dollars, because chips don't have the same psychological feel as dollars. So you're not betting with money, you're betting with chips, and that's different. And I think it's the same with financial products. People are paying with basis points instead of a fee that they have to pay on their credit card every month. And I think because of that, there's a lot of it's so out of sight, out of mind that people don't realize how much they're paying in fees, but especially even if you have a moderately high net worth, let's say $1 million plus, there's a good chance that your financial fees are one of your largest expenses in life. You might pay more than that than you pay for food or clothes or vacations, and you might not know it at all. And I think if we switch to a world, I don't think we ever will, because there are reasons that the AUM automatically deducted fee makes a lot of sense. But if we were to switch to a world where to pay your financial advisor or to pay your mutual fund, you got a bill every month that you had to put on your credit card or write a check for, I think there would be a revolution in financial
So how do
services.
people look into this? Like, what's the quickest way to acid test? You've got a 401k. What's the quickest way to asset test?
401ks are difficult because there's so many different layers of fees, and it's so difficult to add them up.
Or a SEP or an IRA.
I think what everyone should do, and this is especially true for individual investors who don't put that much thought into where their investments are, what they're doing, is just think about your monthly fees in a monthly dollar figure. So you have $1 million, you pay 1%, okay, $10,000 a year, $800-something per month. $800-something per month is what you're paying for your financial services. Compare that to what you're paying for food or utilities or your car or your house. I think if more people put it in those terms, they would be shocked, and a lot of people would seek alternatives at that point.
What's the last stock you ever bought?
The past 5 years, really I've really just been dollar cost averaging into index funds. Michael and I invest pretty similarly. And I think my story is similar to Michael's as well. Starting off, I've been through the gamut of day trading to trending to stock picking, and I just kind of moved its way down into dollar cost averaging into index funds, which is it fits my personality and my risk tolerance. So that's what I do now. But I do own some individual stocks.
And so is there a startup, so a collaborative fund, are they going to let you write checks?
Someday.
And
not in the first 5 weeks.
And if you could pick a couple industries that interest you right now, if you were to say, as a writer, as a thinker, is there a couple industries that stand out?
Yeah, we actually did this thought exercise at work last week where we just asked if you could invest in 5 things. It doesn't have to be a company, just 5 people or industries or ideas. What would you invest in? It doesn't have to be something that you can invest in, but what are you excited about? One of them my list, I think, was Vanguard, Betterment, a clothing company called Combatant Gentlemen, the lower half of wage earners, and something else. Just ideas that I get really excited about. Betterment would probably be a company that I would be really excited to invest in.
And they're just a repackage of Vanguard, so what makes you excited about them?
Yeah, I think for the target that they are, the target customer that they're going for are not people that are going to be persuaded by the idea that Vanguard charges 5 basis points and some other guy charges 7 basis points. That's not what they're going after. What millennials want more than anything for their money is just an app, a product that works seamlessly, works well, works cleanly. And I think Betterment has cracked that code better than anybody. That is something I think financial advisors don't really understand anymore. They could say, look, we can offer better pricing and we give you advice and you can come in and talk to me and do this and that. And especially for younger investors, that's not what they're after. They want something that works cleanly on their phone, seamlessly, easy, that takes 30 seconds to set up. That's what's going to sell them.
Has anybody here heard of Betterment?
I hope so.
So what do you think of that whole trend of robo-advising? You think it's just they're winning because of design, or are they winning?
I think they're winning because of, in large part because of the financial crisis, but a trend that had been brewing for 20 years, just a huge distrust among financial advisors. And they earned that distrust. They, through 20 or 30 years of practices that were industry standard, but were not favoring the customer and the customer's goals, they earned a pretty strong distrust. And now, if you have a system where it's something like Betterment, where we'll allocate your money into a really low-cost strategy, but you don't have to meet with this guy in a suit who's trying to sell you an annuity and trying to upsell you and convert your IRA. There's just so much more trust in that system. But to sort of the opposite point of that, a devil's advocate.
Goldman launched Marcus today, which is their lending platform. Yeah. Bullish or bearish? So they launched their own credit card company. And I think by branding it Marcus, because it's not Marcus by Goldman. Like, there's no Goldman branding. Oh, there's Goldman branding on it.
Is there?
Yeah.
Just by there being Goldman branding in there, I think particularly young consumers probably won't want much to do with it, I would assume. I think 10 years ago it would be different, when Goldman had a really prestigious brand that was associated with being the absolute best in finance. Marcus could have been huge in 2006. I think in 2016, bearish.
And as a firm collaborative, how much assets under management?
125 is the paying capital.
And how many companies have they invested in?
75-ish.
Do you guys talk about Trump versus Clinton and how that affects your mind share?
I would say there's no macro talk pretty much whatsoever. I mean, at the venture capital stage, that's not really what's going to move the needle. It's not what is GDP doing this quarter. It's not, what did non-farm payrolls do last week, or even who's going to be the next president. I think the factors that are going to move early stage companies are so much more granular at the individual company level than would be for macro markets. But even for public markets, if you're a stock picker, if you're an index investor, I think the idea of Trump versus Clinton is the kind of analysis that gets people into trouble. Josh and Michael talked about this earlier. Over the next 30 years, the market's going to give you a return, whether it's 5% real or 4% or 2% or 7%, doesn't really matter. It's going to give you a return. And so many investors, their goal is to take that return and shrink the period that they can earn it in. They're trying to run a marathon in an hour. That's their goal. And the more you try to shrink that down, I think the more difficult it gets, and the more it's going to trick people and trip them up. So rather than trying to say, who's going to be president? What does that mean for the economy over the next 4 or 8 years? Or what is the economy doing this quarter? What did payrolls do? What did earnings do this quarter? I'm much more concerned with the factors that would cause my own behavior to not let me earn that return over the next 30 or 40 years.
And do you think there'll be $1 trillion company?
Yeah, definitely. I mean, I think because you have companies today that are 400 or 500 billion.
Yeah.
It doesn't take that much extraordinary growth. I mean, just talking inflation, you'd say probably in the next 15 years there would be $1 trillion company, even if nothing really changed. But things do change. So yeah, I wouldn't be surprised if, let's say, the next 5 years there's $1 trillion company.
And is there a company out there in America that fascinates you, like big or small, that's like misunderstood or something?
I don't think it's misunderstood. I think everyone really understands it. But Amazon blows me away with how innovative they have been for a large company. It's one thing to have a 2-year-old company that can innovate and turn things around quickly. To be a $400 billion company that employs 120,000 people and be as innovative as Amazon is, I think, staggering. There's a story, I think 2 years ago, when they started Amazon Now, which is the same-day delivery. They'll deliver within 90 minutes in some cities. From the time they got the idea of Amazon Now to the time it was fully running in, I think, Seattle and San Francisco was 90 days.
Wow.
For a company that big to implement something that quickly blows me away. And I just became a Prime member a year ago. And it's we probably do at least 2.
How many
Amazon.
Prime members in the room?
Jeff Bezos has this thing where he says he wants Prime to make it to be a product that it is irresponsible not to own, which is an ambition that I think a lot of product owners would say. Amazon Prime is one of the few that I think gets there.
Now, we all own ETFs, but how many actually own Amazon themselves, the stock? Yeah, it's honest. It's a very small amount of people. I think what Jeff talked about, what I think, and Michael chimed into me a text from Cisco, who'll be up here later, is I think whatever Amazon understands about the customer, which is everything, and that's what he's doing, the holy grail that they have is AWS, the cloud. Meaning It's not just that they understand the customer, it's that they control the whole ecosystem around it and logistics and everything else. So I think that's what gets them to $1 trillion, probably $2 trillion, much faster than anybody. It seems to be happening now. And is there some company that's so beaten up and hated, or an industry that you go, wow, like I'm surprised? Or, if you wanted to gamble, like there would be something that you talk about. Maybe you wouldn't buy, but you go, huh.
I think it'll be a trend that plays out over a decade or 2 or 3. But I think the younger generation does not want anything to do with the traditional brick and mortar banks. The Citigroups, the Wells Fargos, the Bank of Americas. There's so many other options that are cleaner and fit their goals and their lifestyle and have better brands that weren't tainted by the financial crisis.
And so which bank do you use?
I use Capital One, which I guess is a large bank, but they have a online platform that doesn't require you to ever talk to a human, ever. And it's clean and seamless. The app works great.
So that's we've given the banks enough time to actually kind of get their acts together a little bit in mobile. So it's interesting.
But very few, I think few other than Capital One have done it. Of course, Bank of America, Citigroup, JP Morgan, they all have apps. They all have online banking, but they haven't done it very well.
So Morgan's going to hang around for questions at lunch and stuff, but I wanted to keep the show moving. You can follow Morgan, it's at Morgan Housel.
Yep.
The writing is just gets you to think. The reason I think Morgan, he's not telling you what to do, but he's telling stuff and it makes you go, I can be a little bit smarter. I mean, Seth Godin is somebody who's inspired me, allows me to catch up once a week. You don't have to read Morgan every day, but the key with finding a Morgan and with Tadasset Abnormal Returns or a Josh Brown or a Michael Batnick is that you can catch up over the course of a week quickly and really kind of get yourself back on pace. So, I appreciate everything you're doing for the industry. Congratulations on the new gig.
Thank you.
And thanks for coming.
Thanks, Howard.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.